Hello? Are your portfolios also groaning in the decline of Gandhi market? Today we are going to talk about an investment strategy that not only manages risk in an intellectual way, but can help you create a balanced and super intelligent portfolios. Have you heard of ATF? Have you heard what the full form is? An accidentally traded fund is a type of mutual fund. Understand. And what is diversified? It is cost effective, it is traded in the market, at the spot price you can buy it, sell it, and like a mutual fund because there is no fund manager sitting here. This JIS is also tracking the index, replica of the same index. So there is no fund manager, then there is no expansion ratio. So we are going to talk about traded funds. Now through this ETF, which we are going to discuss today, how can the whole world be covered, meaning every geographical area of the world where money can grow. Now, whether it is the Silicon Valley of USA or the fast-growing real estate segment in Singapore, whether it is commodities like gold, silver, crude, aluminum, why should this not be the situation of our country? The essence of what is meant is that among the collective strategies of globally top ETFs we are going to talk about today, we will not talk about Tottenham. If its entire 8-10 portfolios are filled with ETF, then the crash in its total can come only when one of the planets of the total solar system, if something very big is raised on the Earth, some very big bounce earthquake is about to come. So, let's identify without any hesitation that today we recognize globally the 10 best words would be somewhat imprecise. Achekase, which has immense potential to diversify our finances across all global sectors, is the first. Vanguard's FTSE All-World ETF. What is ATF right now? If you have to prepare an entire global portfolio, then these ATMs can be one of the kind portfolios. ETFs can be they invest in the majority of all large and medium companies in the world. Where is the coverage? So like America has Apple, Microsoft, Amazon. If we talk about Europe, then it is Nestle of Switzerland or SEP of Germany. If we come to Asia, then Asia has China's Alibaba, or Taiwan's TSMC, which is one of the biggest semiconductor companies in the world. In India, it is Reliance Industries or Infosys. In all these companies, this ATF puts money. There is a solid ATF for the long term. As you may have seen, the type of companies selected in this means that it targets both developed and emerging markets. So if you want to target both markets, you can study on one of the ATFGs. Second is ETF. The SP 500 of iShares is now the SP 500 in name. This means that the SP 500 Index of America tracks where the aggregate performance of the top 500 companies of America is reflected through this, of coverage. If we talk, then you will get to see American giants and world giants of technology like Apple, Microsoft. If we talk about finance, then the world's giants are finance or international bankers such as JP, Goldman, ECT is part of F. And in healthcare, there are companies like Pfizer and Johnson & Johnson. Pro observation, if we talk about this ATF, then if you see strength in that market and if you want to plan your exposure there, without selecting a stock, then ATF, one of the kind on this you can study. Let's talk about number 3 ATF, which is iShare MSCI Emerging Market DTF. A few days ago on the Emerging Market Index, I had done a video on YouTube about how India has decreased there. So if we talk about emerging markets, then India, China, Brazil, and South Africa in the emerging markets are the fastest growing markets in the coming time. Such giants say because a lot of consumption is being done in these countries. Then here, there is a plan to cover our money in the growing companies of these countries, cover that sector like HDFC Bank in India, Tata Motor, Reliance Tata Motor. If we talk about China, it is Alibaba. If we talk about Brazil, then the company or South Korea, then Samsung Electronics will be seen there. Professor, what is the observation that there is more risk here? But the returns can also be found here because investing in emerging market growing companies means that what is being invested here is being done. Number 4 is Invesco's QQQ ETF. It dominates the tax sector, meaning if you are interested in the tax sector and if you want to invest your money on the growing tax sector in the world, then you can study about this CTF, which tracks NASDAQ 100. If we talk about their coverage, We will see companies like Google, Amazon, Tesla, and Meta in America, JD.com in China, and TSMC in Taiwan, which is known as one of the largest semiconductor manufacturing companies in the world. Professor, the observation in this subject is that if you are interested in becoming a part of the technology and AI revolution globally, then you can do it by going to study. If we talk about number 5, it is Vanguard. In the name itself, you know that such companies that pay dividends and which company will pay dividends, whose cash flow is going strong. Then if you want to generate regular income globally, then you can study on Coca-Cola, Johnson & Johnson of USA. Some of the companies that I have noted down here, you will see if we talk about Europe, then Unilab, UK, and if we talk about France, then Total Energies or Toyota of Japan. These cash bridge companies, cash flow companies have made a lot of money. If you need the growth of these companies, the observation is that this type of investment for retirement and money income can be taken into consideration for the long term, but for that, how to invest in these ETFs, which is good to do with your financial advisors. Which app to use if interested in it, comment. Next video we will discuss it. Number 6, ETF number 6 is ICS US Treasury Bond ETF. This means that this ETF invests in the safe bond. If you have also seen the upheaval that happened in America, FIs are pulling their money very fast. Then where do they find safe bits? Brother, do it towards government bonds. Stop. So if the market crashes anywhere, then the government bonds become safe. Then where does this cover the government bonds? So manly US government bonds, which are treasury bonds, cover them, and the US is a developed economy. So the bonds there are considered relatively safe. That's when you look at the Fed whenever there is. If the rate does not cut, then all the money starts going there. Professor, the observation is that if you want less risk, then you can do a study on ETF number 7, Vanguard's Emerging Market Government Bond. Now you must have thought about the number 6. Not only US bonds, I want bonds from all over the world to keep them engaged, and there is rebalancing in them. Do you know the market? So where is this ETF? But if you invest in the government bonds of countries like India, Brazil, Mexico, then it is after the 10 years or after 15 years, after 10 years, and the money is with income. If the ETF invests in India government bonds or the bonds of Brazil, Mexico, South Africa as coverage, then the pro observation about this is that there is a little risk, but the return means comparatively safe. Then this is also an ETF for safe, as can be accepted from the point of view of study and consideration. ETF number 8, IT shares. Physical gold ETF, look now, equity bonds. This is all covered right now. If we talk about commodities, then the entire purely gold barrage is invested here. And these physical gold reserves are globally. Here we are not talking about digitally. Physical gold reserves where investors like us and you go to carry physical gold. There are many kinds of concerns about safety. Then if they invest on physical gold reserves, then the observation in this context is that when the stock market falls, then only gold will be useful. And tomorrow, if there are a few 3 storms left in digital too, a lot of cyber attacks and all those, if these words increase, then the prices of physical gold reserves will start increasing, and you can be benefited through CTF if you go in the direction of making a reason here by studying properly. ETF number is 9. Just now we covered equities, we just covered gold commodities. The current real estate segment, and now look, there is a desire within everyone sometimes to invest money in real estate and real estate as well. If you find something that is a segment of real estate that is growing at a very fast pace in the world, such as the Cement Property Group of America, you can do this by going to Google or Europe. If we talk about Germany or the UK, if you go and study on these, if we talk about Asia, then Nippon Building Fund, which is working very aggressively in Japan or Singapore. If we talk about Capital Land, which is one of the fastest growing rates there. In India also, if you will see who develop business parks or IT parks here. This, or Middle East, Dubai, etc., if we talk about the limited exposure there, but also put money there. So if there is some diversification in the world's fast-growing real estate segment, then you can consider this ETF, because after selecting an ETF, the rental income and property price will increase. You will be able to see the fun or benefit of the growth of both taking place in this ETF. And the ETF number 10 is iShares Global Clean Energy ETF Green Energy Dominates. be it solar energy or energy segment, be it clean energy, it is the end of the whole thing. Their diversification investment is done there. Like in America, if we talk about energy, Tesla Energy, you will get coverage there. If we talk about Europe, what is in Denmark, there you will get diversification. If we talk about China, you will get to see the diversification you have on long green energy. Professor, what is the observation that if you want both environment and profit, there, start your study in a logical way. So these were the top 10 ETFs of the world, by selecting which you are actually spreading your money in those growing geographical areas of the whole world, where if that geographical area grows, then your money also with time. Keep growing, but investing should never be done with your eyes closed. When will we get a trigger point with logical technical understanding on these? This is the right entry point. This is the right stop loss till we can go, till we can fall. This should be my training profit loss or training profit. If you want to learn all these topics in detail, then you can learn and understand the market together with us. You will find the link in the description. This is all that is being kept in this video. But as you go, I am giving you a warning that if you have to take these investment decisions, then you have to take them only after your study. And if you belong to Indian markets and now you are starting to think about making investment decisions. So I am authorized by CB to consult the people or entities that CB authorizes. I'm not an investment advisor. I am only giving you the information of the world's giants GTF, because there is a theoretical concept that ETFs can never be zero, because whatever rebalancing takes place in the companies in the exchange traded fund, if any company performs poorly, then it is taken out of the ETF. Good companies are counted. ETF can never be zero. Therefore, if there is any idea in the direction of studying with safety, then why start with NetEF and also giving you the information of the world's top 10 giants ETF? The month now was to go and study these companies, and even if you do not invest in them, then at least you will get an idea from the rebalancing happening in these companies that the world's great investors give more preference to in ETFs. Let's keep this much in the video. Take care of yourself and your portfolios. We will meet you in the next video very soon. Please thumb up the video, like, comment, share whatever you want. Thank you very much.